Welcome to My Steel Commodity Flux, the podcast where we track the trends, turns, and turbulence shaping global commodity markets. This is Nikki Fu, Commercial Director at My Steel Global, responsible for growth strategy across our new business sectors. As China enters the first year of its 15th five-year plan, we are launching a series of topical podcasts over the coming weeks, decoding the policy priorities, industrial transformations, and market opportunities emerging during this critical period. Today's discussion focuses on one of the biggest questions in China's energy transition: which green fuel pathways are actually moving toward commercialization during the 15th five-year plan period, or 2026 to 2030, and which are still longer-term strategic bets. The backdrop here is a broader shift in China's industrial policy and global decarbonization pressure. Carbon regulations in Europe are tightening, shipping and aviation are under increasing emissions pressure, and green fuels have been elevated to a national strategic priority for the first time under China's 15th five-year plan. Joining us today is Liao Na, Chief Consultant of Energy Policies and founder of GL Consulting. Liao Na, welcome back.
Thank you, Nikki. It's great to be here. What's changing now is that China's green fuel sector is moving beyond the early-stage technology narrative. Policymakers and companies are increasingly focused on deployment, commercialization, and supply chain positioning. At the same time, different fuels are beginning to diverge significantly, driven by differences in infrastructure readiness, sector-specific demand, and regulatory pressure.
A pivotal period indeed, isn't it? Let's start with the cost challenge. A lot of green fuels remain significantly more expensive than conventional fuels. If cost parity hasn't arrived, what is actually driving the adoption in China right now?
Compliance is becoming the main driver. Most green fuels today cost roughly 1.5 to 2 times more than fossil fuel alternatives. Green hydrogen remains expensive relative to conventional hydrogen, and green methanol, ammonia, and SAF all carry substantial cost premiums. Therefore, the near-term market is not really being driven by cost. Instead, international carbon regulations are creating mandatory demand. Frameworks such as Refuel EU Aviation, the EU ETS, and Corsia are effectively rewarding companies for adopting lower carbon fuels. That creates what we can call a compliance-driven market. Companies may not choose green fuels because they are cheaper, but because they reduce regulatory costs or help avoid future carbon liabilities.
One thing that stands out today is that not all green fuel pathways are progressing at the same speed. How do you see the commercialization landscape evolving over the next 5 years?
We can broadly divide the commercialization pathway for green fuels into 3 phases. The first consists of immediate compliance solutions, primarily biodiesel and HEFA-based SAF. The second is green methanol, which represents the core short to medium-term commercialization pathway. The third comprises long-term strategic options, including hydrogen, ammonia, and e-fuels. Each category is characterized by distinct economics, infrastructure requirements, and commercialization timelines.
Let's break them down one by one, starting with immediate compliance solutions. Why are biodiesel and HEFA-SAF considered the most commercially mature options today?
Their biggest advantage is compatibility with existing infrastructure. They are drop-in fuels, so they can use current engines, storage systems, and distribution networks without major modifications. That lowers deployment barriers dramatically. However, there is one important constraint, and that is feedstock availability. Both rely heavily on UCO. Even with optimistic collection assumptions, UCO supply can only support part of China's long-term fuel demand. As a result, these fuels are positioned for near-term compliance needs, but they are unlikely to become the dominant long-term solution for the broader energy transition.
Let's move to the medium-term pathway. Green methanol has been receiving much more attention lately, especially in the shipping sector. Why is it emerging as such a prominent option?
Green methanol offers a relatively practical balance between decarbonization potential and technical feasibility. Compared with hydrogen or ammonia, both of which remain at early R&D or demonstration stages, green methanol is easier to store and transport and has already secured long-term demand from ship owners. At the same time, ship owners are under pressure to reduce emissions while maintaining operational flexibility. China also has a very strong position in this sector. More than 80% of planned global green methanol production capacity is currently associated with China, and a major wave of methanol-fueled vessel deliveries is expected between 2026 and 2028. This is likely to drive substantial demand growth for methanol fuels over China's 15th five-year plan period.
But the industry still faces obstacles, right?
Absolutely. Global bunkering infrastructure is still limited, many projects have not yet reached stable operating rates, and international regulations are still evolving. Indeed, methanol has one of the clearest commercialization pathways today, but global scaling depends on the pace of infrastructure build-out, supply availability, and policy support.
That's fair. Hydrogen, ammonia, and e-fuels are attracting significant global attention. Why do you see them as longer-term opportunities rather than immediate commercial winners?
The main issue is that the economics and infrastructure are not ready at scale. Hydrogen production costs remain high. Ammonia still faces challenges around engine technology, safety standards, and bunkering systems. E-fuels are even further from cost competitiveness. Strategically, these technologies are very important because they could eventually support potential zero-carbon energy systems. But during the 15th five-year plan period, they are more likely to function as strategic positioning opportunities than as major near-term profit centers.
I agree, and it is clear that there is unlikely to be a single fuel that dominates each sector. Let's start with road transport. Where is the competition actually happening now?
For passenger vehicles, the direction is obvious. BEVs retain dominant because of strong economics, infrastructure scale-up, and policy support. The real competition among alternative fuels is concentrated in heavy-duty commercial vehicle segments, such as long-haul trucking, mining operations, ports, and industrial logistics. Right now, LNG holds the strongest position in medium and long-haul logistics, supported by existing cost advantages and a mature operating ecosystem. Meanwhile, hydrogen and methanol rely more on policy support and demonstration projects.
How about aviation?
SAF has become the dominant decarbonization route for aviation. During the 15th five-year plan period, or 2026 to 2030, SAF's main commercial driver is shifting from corporate ESG commitments toward mandatory international compliance. China's domestic SAF demand remains relatively limited, so the industry is likely to remain heavily export-oriented over the next 5 years. At the same time, the industry is shifting from exporting low-value UCO toward higher-value SAF products.
And in shipping, is LNG still the main transitional fuel?
Yes, LNG is dominant because it has the most mature technology base and bunkering network, as discussed earlier in the context of road transport. Methanol is growing quickly, moving from demonstration projects toward large-scale commercialization. As a result, many shipping companies are avoiding a single fuel strategy. They are building diversified fuel portfolios that include LNG, methanol, and potentially future options such as ammonia and hydrogen.
Before we wrap up, what's the most important takeaway for listeners trying to understand China's green fuel landscape?
I would say there is unlikely to be one universal green fuel winner. Different fuels will succeed in different sectors depending on economics, infrastructure compatibility, and regulatory incentives. In the near term, the practical commercial opportunities are likely to remain concentrated in compliance-driven markets, especially SAF exports and marine methanol supply chains. Hydrogen, ammonia, and e-fuels remain strategically important, but their large-scale commercialization is likely to take longer.
Thank you, Liao Na, for joining us and sharing these insights. And for those who would like to follow these developments in a more structured and forward-looking way, GL Consulting acts as your China decoder, helping turn complex policy and market signals into clearer, decision-ready insight for global energy and chemicals professionals. Reach out to us for a sample issue of the latest China Policy Perspective report for regular analysis of China's policy direction, energy security priorities, and the broader market implications of geopolitical disruption in the context of China's 15th five-year plan. For more information, please visit mysteel.net or contact us at inquiries@mysteel.com. Thanks for listening to MySteel Commodity Flux, and thank you again, Liao Na, for joining us today. If you found today's episode helpful, be sure to subscribe for more analysis on global commodity markets. Until next time, keep tracking the flows.